Let me ask you a question. Do you feel like you're in control of your money? You know for sure every time money gets into your account. But do you know how money goes out of your account? To get a grasp of what's going wrong, we'll go through the 7 most common bad money habits that keep you from achieving more, that keep you poor. We all know, and we've all been educated on how to make money by working a job. That's the #1 purpose of the education system. You go to school, you get a diploma, you work, and you earn money. That's all we've been told. So how come after years and years in the public education system, we never get taught on how to handle our hard-earned money? When I received my first paycheck, I didn't even know what a saving account was for. Dave Ramsey, whether you like him or not, said last year in 2023 that 9 out of 10 Americans say that high school did not leave them fully prepared for handling money. It's completely normal if you struggle with money. You're not the only one. I've been fortunate enough to be born in Canada in a family with sufficient means. And here, we don't get completely wrecked by student loans like our lucky American neighbors. But to set our house in order, to finally get control over our bank account, we need to identify the places, the pain points where most people go wrong with their money habits. I was and I still am guilty of some of those bad habits. But if you truly want to stop being afraid of looking at your bank account at the end of the month, you need to sit through all of it. Especially because my last point is the most important one, in my opinion. One of the most common and impactful bad money habits is impulse buying. Impulse buying is basically buying something without thinking about it rationally. You're not thinking about how much it costs, and you're not thinking about, do I really need it? Just take a look around you. Look at everything that's surrounding you and think to yourself, is there anything in here that I bought with my own money that I don't even use? And I'm sure you will find something. If you're going around your house and finding that everything looks and feels so cluttered, you're most likely a victim of impulse buying. And I know it's so hard in our consumption and consumerism society to avoid falling into the trap of buying things we don't need. Impulse buying also affects a lot of people since shopping can also be a mechanism to cope with stress or boredom. Just look at what you bought during the COVID-19 pandemic. Everyone was stuck at home. Everyone was bored. So what did we do? We bought more stuff. Around half of the American population saw an increase in online spending during the pandemic. The second, also very common bad money habit is paying for convenience. Convenience can be a huge time saver, but it usually comes at a very high price. Let's say you don't have the time, or you don't want to cook. You don't want to clean your place. You don't want to drive your car. So what do? You order takeout. You hire a cleaner. You take Uber or a cab to go to work. All those things add up, and at the end of the month, they really pile up to an incredible amount. Some of it may be worth it, but others may not. Living beyond your means. That means spending more than you earn and actually funding your lifestyle through debt. This can come from a personal standpoint. Maybe you really like those luxurious things. Maybe these are your life goals. Maybe these mean a lot. But one thing is for sure, people like to compare with others. More often than not, people's self-esteem is built on top of other people's opinion. And so if your friends are spending a lot of money on expensive stuff, what are you going to do? Are you going to spend the same amount of money to buy the same expensive stuff? People want to fit in. People want to be at the same level than their peers or higher. They want to show their worth. Just think about doctors, lawyers. They all have a high spending lifestyle. Why is that? Because it's the culture. When you go to law school, when you go to medical school, people are spending a lot of money and they're not afraid to get in debt because later they know they'll have a high salary to be able to repay their debt. But the thing is, when you start living a certain way, it's not because you finish studying that you'll suddenly completely change your habits. Habits are built in the long term. Research shows that rank of income, not income itself, affects life satisfaction. This means that people are constantly comparing so much that having a higher salary than your peers actually makes people happier than making a lot of money. The fourth bad money habit that needs to stop is overloading your credit cards. Let's be real for a moment. Credit cards can be incredibly bad debt. It can be tempting to use your credit cards as some kind of a loan, but it's a slippery slope. As soon as you cross the line, when you're not able to pay the full amount of your credit cards, that's when it hits you. When you start to be late in your credit card payments, it adds up and it adds up to a point where you're not even able to pay the interests anymore. Credit cards, if not used properly, are an incredibly deep pit that you don't want to fall in. Now, for the first money-making habit you need to have is saving for emergencies. Life can be full of surprises, good surprises and bad surprises. There's many things that we don't control. Unexpected expenses, medical bills, car repairs, or losing your job. You never really know what's going to happen. It can take much less than you think to completely derail your finances if you're not ready for it. It's been studied that saving habits are influenced by many environmental and personal factors, like your tolerance to risk, for example. But saving for emergencies doesn't mean you have to have a special dedicated account to freeze some money for emergencies. It just means that you have to be liquid in your finances. You have to be able to take out quickly some money to pay for unpredictable things. For the next bad habit that is more common than you think is not investing your money. And some people think that investing your money means putting your money into a savings account with a really low interest rate. Well, I'm sorry to tell you, but this is not the best way to improve your financial situation. There are many other options available, like the stock market, real estate, cryptocurrencies, and other assets that give you a much better return. This next one is more of a lifestyle habit, but let me tell you, it will have by far the most impact on your ability to manage your money. And I have great news for you. You already stopped this bad habit because the mistake I'm talking about is not learning about personal finance. This is the knowledge and skills to make informed decision about your money. It will help you achieve your goals and improve your life. But by watching this content, you already started your journey into personal finance. The only thing you need to do is to continue walking on that path. We identified together 7 bad money habits. In my next videos, I will be going in detail on how to get rid of those bad money habits. So click that subscribe button because those will be the next crucial steps in our journey to start investing in ourselves. I'm Vince, welcome to my channel.